Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
We might see the economy actually really start to benefit from policy, from stimulus, from this changing of the guard, but the markets might not be able to do much because so much is already priced in. And we're still not talking about the possibility of higher taxes, which I think is something that we really have to start, being at least mildly concerned about.
The pandemic fueling a massive disconnect between markets that keep marching higher and a virus-plagued economy, a dynamic that could end up reversing next year, according to Academy's Peter Cheer. Wall Street now looking to the vaccine and publishing their outlooks for the year ahead. Bank of America recommending investors sell the vaccine. They write the following: we say sell into strength on vaccine in coming months. Credit and equity prices to peak on peak positioning, peak policy, peak profits as optimism tops ahead of vaccine distribution. But by the reopening and the recovery in 2021. For more on that, let's bring in Bloomberg's Kayleigh Lyons. Good morning, Kayleigh.
Good morning, John. Well, that by the reopening call really is just a rotation call coming from Bank of America. The strategists there seeing really a continuation of the trend we just witnessed in the month of November in 2021. They see small caps outperforming large, value outperforming growth. They also expect commodities to top credit, and within credit, high yield to perform better than investment grade. Now, B of A is warning that rotation could be disorderly, maybe some moments of doubt, but they say to use those moments as opportunities. And really that call for a rotation for the cheaper areas of the market to outperform is echoed across the street. Jefferies chief global equity strategist Sean Darby just turning bullish on the financials for 2021, citing that sentiment shift toward value. And both J.P. Morgan and Morgan Stanley are calling for that value rotation not just to extend from sectors here in the U.S., but also to global equities. They say that Europe should get a bid in 2021 due to that shift towards value, where at BlackRock they are saying small caps will outperform large caps. The question, John, is how far does that rotation actually run? Because it certainly has ample room to do so. If we can hop into the terminal at GTV Go and take a look at value's relative strength to growth, we are coming just off of record low relative strength. Yes, the month of November did make a difference. You saw a slight tick up when it comes to that chart that I think we're getting ready to show you right now. But basically the point of the story, John, is value has a long, long game of catch up ahead, John.
So consensus right now into 2021. It's value over growth. It's cyclicals over defensives. Kayleigh, thank you, by the way. It's small over large. It's international over the United States. Yields are going to be higher, not too high. They'll stop around 150. We don't want to disrupt that rally, do we? Nothing could disrupt that rally. That's the story around markets. I know it sounds like I'm complaining. I hope it's great for everybody. I truly do. Just become very consensus at the moment, looking a year out. Alpha Omega's Peter Cicchini remaining cautious following a record month for global equities. He writes the following: the recent rally in the small caps only reinforces my view that the equity market is being driven by qualitative narratives and emotion rather than quantitative rationale or by logic. All in all, the rally is about as overdone as I've ever seen. Peter joins us now for more. Peter, fantastic to catch up, sir. And good for you in your latest note. A bit of a mea culpa at the top. But let me run through the year for you from my standpoint. Start of the year, pretty bearish compared to the street. Weren't comfortable with the record highs we had going into the pandemic. Coming out of the pandemic, became much more constructive before most. Then June happened, Peter. And that's when you sat out the move. And the run-up from June into what we've just had, a massive month in November. Peter, walk me through your thinking now, the lessons learned through 2020.
Yeah, thanks, Jonathan. And by the way, I'm a huge fan of your fashion sense, and I do.
Thank you, sir.
I like a shoulder.
I appreciate the support. I need it. You know,
the tapered trousers work for me. Look, you know, it's interesting when you're on the wrong side of a trade. You know, you have to look deeply into why that might have been the case. And I think one of the things really that's sort of absent from the narrative right now, Jonathan, is valuation. And Peter Scheer alluded to it, and he alluded to the higher taxes that must eventually come from gigantic deficits. But the conversation about valuation rarely, if ever, enters the narrative, especially if you look at some of the narratives that are going on social media. And frankly, I think retail really is in charge. And one of the reasons why I sort of reversed my tactical stance into the end of the year is because I think there's going to be an institutional chase of retail flows into the end of the year. And markets could very well go higher with window dressing and with those flows into the end of the year. But at the end of the day, when we look at valuations and we look at the trend of earnings before the pandemic even began, earnings were trending lower, especially for cyclicals and small caps. The growth was not gangbusters. We had a yield curve inversion, which is one of the reasons why I was not constructive on 2020 coming into the year. And even for the S&P 500, earnings were flat. And so I think the assumption here for most investors who remain bullish is that we're resuming some sort of a trend that was already in place pre-pandemic. And I just simply don't see it that way. And investing should be about what you get in terms of future cash flows for a price you pay today. And from my perspective, the risk reward there is not very good at all.
Peter, I think a lot of people agree with you. It's just been really uncomfortable to sit it out, given the rally that we've seen. You said a couple of things there. I want to unpack one of them. Retail in the driving seat. What is it about the price action, the flows that speak to you and screams the message, the argument that retail's in a driving seat right now, Pete?
Well, you know, the flow data that I have available from various banks bears it out. I think when you look at retail option call activity, for example, that also speaks to what's going on in the retail space. When you look at skew, even on the indices, you see that single name call buying has actually helped to keep volatility on the VIX elevated, for example. And that to me indicates more than anything else, frankly, speculative activity that investors or market participants are renting rather than wanting to own the market at these levels.
Peter Scheer, we've got to leave it there. Always looking sharp, Pete, and love catching up with you, sir. Appreciate the support. I support you, you support me on what the fashion trend should be like on Wall Street for anyone that cares. Coming up next, the analyst action you need to know. That'll be next in our morning calls. Then later, turning the page on a record-setting November, forecasting the year ahead with Morgan Stanley's Lisa Shallett. That conversation just around the corner. Should we get you some price action? The month of November wasn't about the S&P. It was about the small caps up 20%. The S&P was still up 10, 11 percentage points. Just an unbelievable rally in the equity market broadly in the United States and all around the world as well. This morning, we had some weight to that rally. The S&P up 32. We advanced 0.9% for our audience worldwide. The cash open just around the corner in New York. This is Bloomberg.
The pandemic swells the gap between the rich and poor around the world. There may be no starker case of inequality than Venezuela, where the socialist leader Nicolás Maduro has kept his hold on power by fostering a Darwinian dollarization under quarantine. The The nation's mighty oil industry has collapsed. Water, electricity, and gasoline are barely available, and hunger hunts vast portions of the population. 4 out of 5 Venezuelans can't afford a basic food basket last year, according to a research by the main universities. Meanwhile, Caracas neighborhoods have a dozen new delivery services bringing to their doors everything from truffle salmon poke bowls to electronic cigarettes and $50 gluten-free birthday cakes.
Me indigna a forma que esses governantes dirigem esse país pensando só naqueles que já têm muito e já têm demais. E é mais uma vez por isso que a gente optou por ocupar esses espaços, para que a gente lá de dentro possa exercer a mesma pressão que a gente já exerce na rua de fora para dentro. A gente quer abalar essa estrutura.
Eu tenho muita esperança, tenho muita fé em Deus que aqui a gente ainda vamos conseguir a nossa moradia digna, a nossa casinha para, ao menos nos últimos dias de vida, se vender numa casa.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Leaving behind a monster month of November and adding some weight to it. The S&P 500 up 0.9%, the Nasdaq up 8%, the Russell up 1.3%, the Russell up more than 18% in November, best month ever. The Nasdaq up 11%, best month since August. The S&P still up about 10.75%, the best month since April. Hello December, switch out the board on the bond market. Your 10-year yield breaking out a little bit this morning. Yields up 5 basis points now to 0.8881%. The average through the month of November, 0.86%. We start to get a lift in the last hour. A test of that lift. The PMI, then the ISM, then claims Thursday, then payrolls Friday. In the FX market, the euro making another move for 120, 119.82, up about 0.5%. Stronger euro in the mix. In the commodity market, weaker crude, OPEC plus just stepping away. Having more talks about talks. $45 on WTI, down 0.8%. That's the cross-asset story this Tuesday morning. Good morning to you all. At the market desk with your movers, here's Abigail.
John, well, with that truly risk-on tone, let's take a look at one of the sources of the bullish optimism, and that, of course, the vaccine news that we have out of the likes of Moderna, Novavax, and Pfizer. Really new old news, if you will. Moderna yesterday, of course, announcing that's filing with the FDA and the EU. Novavax today getting a little bit of a break as the UK study is fully enrolled, bouncing back from yesterday's decline. And then Pfizer and their partner BioNTech are seeking EU clearance for their vaccine. So these stocks are up in a big way. And unlike yesterday, where we did have Moderna soaring on their news around the FDA and the EU, today we have the cyclical trade back in action. We have American Airlines and Carnival Cruise Lines both higher. So folks perhaps going to trade again, traders focused on that. And then, of course, energy, yesterday's worst sector, down more than 5%, the worst day since June. Today, popping back higher. ExxonMobil is higher. And the bank's getting a bid, too. You were just showing those yields backing up. The yield curve is steepening, too. So we have J.P. Morgan up 2%. But the big stock, John, and another big source of optimism, that, of course, is Tesla. The stock is trading higher on the news that it will be added in one chunk to the S&P 500. It's interesting, John. This stock now up about 600%, more than 600% on the year. One question will be what happens on December 21st, after December 21st, after all of this manic buying into being added to the S&P 500. Will that be a sell the news event? But today, all the buyers are out.
How disruptive will it be? Abigail, thank you. 2 minutes into the session, as Abigail points out, energy on top, up 2.64% in the early part of trading. For the month of November, we trimmed some of the gains in yesterday's session, but what a month still. Up by 26.57%. Massive month of gain for the energy sector on the S&P 500. Every single sector in positive territory. It's been quite a rally on the S&P 500, not just through November, but also into this morning's session as well. As Abigail pointed out, the financials very much on top this morning with a gain of 1.74% off the back of a move on Treasury yields in the last hour or so, up about 5 basis points on a 10-year. That's the story of the market. What a month it's been. UBS's Stuart Kaiser expecting the cyclical rotation to continue leading international markets even higher.
I don't think we're completely over our skis long, some of these cyclical rotation trades yet. It's going to take a little more time to unwind, than